Hello everyone, welcome to my vlog today. 20 assets that are making people rich. Certainly. Here's a list of 20 types of assets that have the potential to generate significant wealth. 1. Real estate. Residential, commercial, or rental properties can appreciate in value and provide rental income. 2. Stocks. Shares of companies can appreciate over time and pay dividends. 3. Bonds. Government or corporate bonds can provide regular interest income and are generally lower risk compared to stocks. 4. Mutual funds. Investment funds that pool money from multiple investors to buy a diversified portfolio of stocks, bonds, or other assets. 5. Exchange-traded funds, ETFs, investment funds traded on stock exchanges, similar to stocks, that can offer diversification and low fees. 6. Cryptocurrencies. Digital or virtual currencies like Bitcoin or Ethereum can potentially offer high returns, though they are highly volatile. 7. Startups. Investing in or starting a successful business can yield substantial returns if the business grows. 8. Intellectual property. Patents, copyrights, and trademarks can generate royalties and licensing fees. 9. Precious metals. Gold, silver, and other precious metals can serve as a hedge against inflation and currency devaluation. 10. Art and collectibles. Rare art pieces, antiques, and collectible items can appreciate in value over time. 11. Agricultural land. Farmland can provide rental income and appreciate in value, particularly as global food demand increases. 12. Luxury goods. High-end watches, jewelry, and other luxury items can sometimes appreciate in value. 13. Venture capital. Investing in early-stage companies with high growth potential can be highly profitable if the companies succeed. 14. Royalties from books or music. Authors, musicians, and creators can earn ongoing income from their works. 15. REITs, real estate investment trusts, companies that own or finance income-producing real estate, offering dividends and capital appreciation. 16. High-yield savings accounts. Though typically lower risk, these accounts can offer better returns compared to traditional savings accounts. 17. Peer-to-peer lending platforms that allow you to lend money directly to individuals or small businesses in exchange for interest payments. 18. Private equity. Investing in private companies or buyouts can offer high returns, though it's often accessible to accredited investors. 19. Rental income properties. Single-family homes, multi-family units, or vacation rentals can provide consistent income and potential appreciation. 20. Index funds. Funds that track a specific index, like the S&P 500, offering broad market exposure and typically low management fees. Diversifying across these assets can help manage risk and potentially increase returns. Always consider your risk tolerance, investment horizon, and financial goals when choosing assets to invest in. Certainly. Here's a more detailed explanation of each asset type. 1. Real estate. Residential. Buying homes or apartments to rent out can provide a steady stream of income. Property values can also increase over time. Commercial. Investing in office buildings, retail spaces, or industrial properties can yield higher rental income and potential appreciation. Rental properties. Properties rented out to tenants can generate monthly rental income and, potentially, capital gains if property values rise. 2. Stocks. Common stocks. Ownership shares in companies, with potential for capital gains, price appreciation, and dividends, periodic payments. Preferred stocks. Shares that provide fixed dividends and have higher claims on assets than common stocks in the event of liquidation. 3. Bonds. Government bonds. Issued by national governments, typically considered low risk. Examples include U.S. Treasury bonds. Corporate bonds. Issued by companies to raise capital, offering higher returns than government bonds but with higher risk. 4. Mutual funds. Actively managed. Funds managed by professionals who actively make investment decisions to try to outperform the market. Index funds. Funds that aim to replicate the performance of a specific index, such as the S&P 500, often with lower fees. 5. Exchange-traded funds, ETFs, stock ETFs. Track specific stock indices or sectors. Bond ETFs. Track various bonds, providing a diversified bond investment. Commodity ETFs. Track commodities like gold or oil. 6. Cryptocurrencies. Bitcoin. The first and most well-known cryptocurrency, often used as a store of value. Ethereum. Known for its smart contract functionality and broader use cases. Altcoins. Other cryptocurrencies with various uses and technologies. 7. Startups. Equity investment. Buying shares in a new or early-stage company. High risk but potentially high reward if the company grows significantly. Angel investing. Providing capital to startups in exchange for equity, often before they become profitable. 8. Intellectual property. Patents. Legal rights to inventions, allowing owners to license or sell their innovations. Copyrights. Protection for original works like books, music, and software, providing royalty income. Trademarks. Protection for brand names and logos, which can be licensed to other companies. 9. Precious metals. Gold. Often seen as a safe haven asset during economic downturns and inflation. Silver. Used in various industrial applications and also seen as a store of value. 10. Art and collectibles. Art. High-value artworks from renowned artists can appreciate significantly. Collectibles. Items like rare coins, stamps, or vintage toys can increase in value over time. 11. Agricultural land. Farmland. Can appreciate in value and generate income through crop production or leasing to farmers. Timberland. Land used for growing trees can provide periodic income from timber sales. 12. Luxury goods. Watches. High-end watches from brands like Rolex or Patek Philippe can appreciate. Early-stage investment. Funding innovative startups with high growth potential. These investments are high risk but can yield high returns if the startups succeed. 14. Royalties from books or music. Books. Authors receive royalties from book sales. Music. Musicians earn royalties from sales, streaming, and performances. 15. Rights. Real estate investment trusts, equity rights. Invest in and own income-producing real estate. Mortgage rights. Invest in real estate mortgages and mortgage-backed securities. 16. High-yield savings accounts. Interest rates. These accounts offer higher interest rates than traditional savings accounts, providing better returns on cash deposits. 17. Peer-to-peer lending. Platforms. Websites that connect borrowers with individual lenders. Lenders earn interest payments on the loans they provide. 18. Private equity. Buyouts. Investing in private companies, often by buying out public companies and taking them private. Growth capital. Investing in private companies to fund expansion. 19. Rental income properties. Single-family homes. Renting out individual homes can provide steady income and property appreciation. Multi-family units. Apartment buildings or duplexes can offer higher rental income. 20. Index funds. Broad market exposure. Invest in a diverse range of companies that make up an index, like the S&P 500, reducing individual stock risk. Low fees. Typically have lower management fees compared to actively managed funds. Investing in these assets can help build wealth over time, but it's essential to research each type and understand its risks and potential returns. Diversification, spreading investments across various assets, can also help manage risk and improve overall returns. Thanks for watching.